Good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES gapped lower and pretty much balanced in a range in the overnight session. We are seeing some negative divergence between the S&P and the other markets, and short term, we're seeing a bit of weakness in the market. Now, we've had a pretty decent run over the last couple of weeks, but it has been on light volume, and at this point, although the bigger picture will remain bullish, even if we get any type of pullback, short term, we could see a little bit of weakness, a little bit of consolidation. So on the day time frame today, we'll be using 35.5 to 37.5 as the micro bull bear zone. And the primary catalyst this morning is the ISM manufacturing index at 9 a.m. Central. So the first 30 minutes could be just continued balance in a range, and then we get a directional move on the ISM manufacturing index, and that could be a bit of a sustained type move. So, short term with these divergences, we do want to be cautious on taking any aggressive long setups, and we will be using 35.5 to 37.5 to help us figure out which side's in control. After econ's out of the way, if we stabilize above the micro bull bear zone, then we could head up, fill the gap, and test the 42 to 44 resistance. If that zone gets tested on a breakout type move of the overnight range after econ, then we certainly want to be cautious fading it. We don't want to short it, because at that point S&P would be breaking out of the overnight range, out of the overnight balance, and we could get a push through that zone up towards the 46.5 all-time high, in that area, 45.5 to 46.5, before we get any type of sell response. So, how the zone gets tested, of course, matters just as much as the trade location itself. So, the main idea is in the first 30 minutes, we're going to be cautious on both sides. Once econ is out of the way, we're going to look at which side is showing more aggression by monitoring the NYSE tick and also watching where ES is trading in relation to 35.5 to 37.5. If we get a downside break, we can get some pretty good momentum down to the 27.5 naked VPOC, 29 gap. We can get some buying at that support zone, but only the aggressive buyers are going to step in at that zone, because at that point you'd be breaking below the recent 4-day range, and the bounce at 27.5 to 29.5 could be very short-lived, where we get another wave of selling off that bounce, and then we go down to 22 to 25, which is really the better spot for buyers to enter the market. More conservative trade location, better reward to risk. So in the event that we do get some short-term liquidation, the downside objective would be 22 to 25. The final downside objective, the first and the primary one, would be 27.5 to 29.5. That's the high odds downside objective. And then 22 to 25 is where we can even consider fading the move and trading from the long side, targeting a move back up towards 29 and 33.5. In the event that the bull bear zone holds off the econ reports, then of course 42 would be a very clear upside objective. The prior VPOC, we can get some selling over there, but it's all going to depend on how we're heading into it. And then we could test the 45.5 to 46.5 area on the upside before we get any decent selling. On the upside, because of these negative divergences and the weakness in the market heading into the open, I think we're going to see more two-sided price action, where if we get an upside move, it'll get sold into, it'll balance a bit, and then we could resume or we could fail. So I am certainly more cautious on the long side heading into today. The last few days have been very bullish, but the market could be due for a pullback or for some type of consolidation in a range. So I am going to be cautious on the long side in terms of trade location. It doesn't mean that I'm not going to trade from the long side. It just means that I have to get in at a good spot where there's enough reward potential up towards 41, 42 to justify the trade. Otherwise, I'll wait and let the market kind of play out and tip its hand, show me which side's in control, and then try to get on board on a pullback if we're seeing a lot of momentum on the upside. But, first day of the year, we are seeing some better volume so far in the market. Ideally, that theme continues, and we can get a slightly better range. But so far, the S&P, bigger picture, if you look at the charts, has been balancing above 33.5, and we could just continue a bit more of that before we get any continued upside or a pullback to the downside. So we'll be watching 35.5 to 37.5 on the upside. 41, 42 is important. Let's see how the market plays out after econ, and just take it from there.